Hello, Mr. Eggenberg.
Hi, Dave. How are you? Are you in the Warrior program?
Yes, I am. I've been a warrior for quite some time. Got a, you know, business partner. We tackle the big stuff, not messing around. Could go on and on. We're recording. This is gonna be the beginning of the recording of it.
That's good. The recording. We ever do anything to recordings, or we just like you just have them start?
um, I used to with the other group like start dropping them in the group, and I'll probably do it with this one too. Just like you can like save like videos into the group, so I'll probably do that. People want to go back, just as like archived. If we do anything, no, but we should like definitely start snipping content and stuff.
Drop the raw into like YouTube, just like raw file, like meeting notes. Is that a bad idea?
What do you want to do?
Just like raw meeting and just like a YouTube. You have it.
Yeah, I should. Yeah, everything should go into the DTCG from now on, and we'll just label them as like podcast, meetup, whatever.
Yeah, I think it's
And
smart just so like people could reference it. Um, like
yep. Speaking of which, did I get you with a piece in the double piece? Oh yeah, you're in there, double piece sign.
I should have done that right. Here's the 10.
Yeah, you're only at 4x, man. What is that about?
Honestly, it was an illusion. All my pens were
tossing
up.
up, tossing up gang signs on my nice.
I had a pen in my hand. I was signing $1 billion check. I couldn't get out the
Ah,
right there.
yeah. He was holding all the bills behind. uh,
So obviously we'll discuss a couple of the deals to see what everybody else is working on, see who's going to any events coming up, general meet.
yeah, that's the big thing. This after our big Orlando sprint, I feel like our like I said, the next big thing is like what's the next quarter of in person stuff look like, and it'd be nice to leverage here in the city a little bit more.
And I kind of like the quarter by quarter chunk and like these sprints. There's money in
Yeah,
this. Sure.
yeah, I think it's really smart. Just like head down Q1, head down Q2, just rinse and repeat type of stuff.
We're joined by Lacey. Hey Lacey, how are you?
Oh, hello, I'm so good. How are you?
Excellent.
Hey,
Thank you.
Lacey.
Hello.
I don't know if you've been in one of these chats before.
I have not. This is my first time. So thanks for having me.
Our pleasure.
Yeah,
Welcome.
welcome. It's been I guess what a little pause. We took a pause through the holiday season. I think we took a month off or something like that. So like to gear these back up though. We've been having some fun discussions around ideas and just kind of bouncing the methods and information and methodologies with everybody in the group. So yeah, it's been good so far.
Love it.
Lacey, I take it you're a warrior, right?
A warrior. Let's see. So you know what? I am not a warrior. I don't know what that means.
Oh, then you're not a warrior. You would know what that meant.
I don't.
Okay.
Explain. Tell me what this is.
Sure, sure. I guess the question I can ask is, where did you find out about this group?
Yes. So I found out about it on Facebook, and I can't pinpoint where I found it. I'm in a ton of different groups. So
Mark Zuckerberg found you.
that's right.
Yeah.
That's right. The algorithm. It was destiny.
Yeah.
Welcome nonetheless. Are you like involved in the multifamily world right now, or something that you're looking to get involved in?
Yeah. So this is I'm just beginning my journeys in multifamily real estate. I'm switching up what I was doing. I owned and operated a children's salon and family boutique for the last 7 years. And COVID kind of changed my path. So I'm jumping into multifamily with both feet and eager and excited.
Awesome. Hopefully, we can provide as much possible information. This will give you like a quick little background. We're expecting a few more people, but we'll give you like a quick intro. So Dave and I, we are business partners in David and Travis Capital Group. And we look to acquire apartment buildings in Orlando, sort of 100+ unit deals, value add. and we want to own a lot of apartments. That's our mission.
I love it.
That's cool. So you ran a children's salon for a bit.
I did. Yes, I did. So that was, I did that right out of, honestly, I did that right out of beauty school. So I only had about a year of experience before I owned and operated. And it was great. COVID just kind of changed that. And I know that, I know kind of what I want out of this life. And I figured multifamily is going to be the vehicle for that. So, that involves a lot of giving back and, to that next generation, because I do have a special heart for those babies still.
Okay. Where are you based out of?
I'm in Reno, Nevada.
Okay, very cool. You are you looking to as one of your markets in Reno?
I would love to start out here, but unfortunately I'm learning really quickly that it's very competitive, very closed market. And so I'm also looking more in, the South. I've been looking strongly in Tennessee and Georgia right now.
Okay.
Don't hear too much Tennessee. So yeah, that's interesting. Is that just market-based decision, or do you have ties there, or what kind of leads you there?
Yeah, so that's just all no ties there. That's just all research I've been doing. And I just kind of like the idea of the area, and of course the research too.
Yeah, no, nothing wrong with that. Yeah, just wondering where the thesis came from. Yeah, that's awesome. So you mentioned like you want to get in multifamily. Do you you kind of have pinned down like what kind of avenue are you looking to buy and hold yourself? Are you looking to go bigger and partner with teammates? I don't know if you considered any of that. What you're kind of looking at?
Yeah, definitely. So with the mentorship that I'm going through right now, it's syndication. So definitely always networking with teams, and building that network. Typically what our hold is 3 to 5 years value add, leaving enough meat on the bone for the next person. And I feel like that's what everyone's doing right now, but
it's a strong model. That's why everybody's doing it.
Yep.
No, that's awesome. That's awesome. I think we got, I don't know if Jerron is on quite yet. I see him muted without the camera. I don't know if he's getting on. Hopefully I'm saying it right too, Jerron, but welcome if you're there.
I am here. I was getting settled. And yeah, it's pronounced Geron, like Geronimo. Yeah, you got it right.
Awesome. Hey, I like that. I tell people my last name is Morja like Georgia. Usually the similes stick, so it's
Absolutely.
Good. Yeah.
I agree.
So yeah, thanks for joining us. What brings you here tonight? What's your interest? What are you focused on?
So I'm about 6 months into multifamily, and I realized that my biggest challenge is probably capital raising, because I've never had to do it before. Actually co-GPing in a deal now where that's part of my responsibility. So I thought I'd connect and see, what I could learn here and what I could apply going forward.
Yeah, it's interesting. So you're co-GPing and what they wanted you to raise like your proportional share as far as your equity in the deal goes. Is that how that's working out, or what was the kind of conversation? Okay.
Yeah, more or less that. Yeah.
Cool. How much you got to raise for that, if you don't mind me asking?
Just $500,000.
Okay. Yeah. So are you going like friends and family network for that? Or are you trying to like reach out?
Yeah, it's a 506B. So yeah, friends and family. I figured that should be enough to cover it.
Yeah. I think so. Where is that deal? I don't know if you said or not. I might have missed
Augusta, Georgia.
Augusta. Cool.
Yeah.
That's pretty neat. I haven't heard too much there. You got people in that market, or is that
my
joint
partners
venture?
My partners actually have a lot of assets there in Georgia, Augusta, Atlanta. So yeah, the resources were already in place. The property manager, lender. So
nice. Yeah. Yeah, like Trev was saying earlier, me and him, we focus on large scale multifamily in Florida, and we'll also partner with people throughout the Southeast, depending on the deal and the partner, obviously. But yeah, this group was kind of formed, and it's still even an experiment, which is funny. But we call it the Capital Raising Lab just kind of as a, just as a kind of work on systems and build them out and see what results we get out of them. So everything's an iteration in our eyes, and it's just working on continuous improvement. So yeah, this group we actually kind of started through the fall, and then had to work on a huge deal that we were working on, like all hands on deck. Unfortunately, came second fiddle to this big 280 unit in Orlando. Put a lot of juice into that one. Learned an absolute ton. But yeah, we're looking to keep this group going because we've gotten a lot of good results out of it in the past. So
Awesome. So you said you started in the fall, like fall 2021?
as far as this group specifically, we've been in the multifamily game for a couple of years now.
Okay.
Raised for a few big deals, and then yeah, pretty much like I said, started to focus on the GP side of things, and mostly in Florida. But we get a lot of deal flow. A lot of people love to invest in Texas too, and some of our kind of network is focused there. So we'll look at those deals. Not all of them kind of hit our metrics, but we'll kind of look at everything if our partners are correct first. So that's number one for us. But yeah. Yeah. So you mentioned like outside of friends and family network, kind of growing the capital raising skills. Um, what's your thoughts on that so far? Like, what's the thesis, or what are
Uh,
you trying to do? I guess.
yeah, so I guess just connect with as many people as possible, let them know what I'm doing, so that when an opportunity does come along, I can reach out, see what their investment criteria. Well, first of all, see if they're interested, and if so, see what their investment criteria are. Just keep them informed. Even if I don't have anything to put in front of them at the moment, but keep them informed, let them know I'm still alive, still working in the business.
Yeah. Is anything like you're finding more effective at the moment, or that you're finding you enjoy more? I feel like we always talk about like everything's just a review, like what's working, what's not, what do we like doing, what do we don't like doing. So kind of like to see what people got to find their niche to have a voice, pretty much is what I say. So
Yeah, I mean, because I've been targeting friends and family, I guess with this initial raise, a lot of what I've been saying is mostly educational, because it's their first exposure to the multifamily space, and they don't know how it works, what the words mean and the presentation. So a lot of it's just been an education, which I don't mind. It keeps me sharp, make sure I know what I'm talking about. Um, but I would imagine, as I start to encounter more savvy investors or people that have been LPs in deals before, I would imagine the conversation will shift, somewhere else outside of the educational component. But I'd be interested to see, what others think or what their experiences have been.
yeah, I mean, I don't know, Travis, you could probably speak on this more. We have a range of people interested in our deals, from kind of typical what you'd expect LPs, like more family friend type of money. But then we got super high net worth people that if we even try to grace them with a deal that's like even slightly out of their kind of criteria, it's like, what are you doing, wasting my time type of stuff. So it's funny how as you go up, climb up that ladder, how much different it can get with those talks. So yeah, definitely know exactly what you mean. Um, yeah, it's really funny though. Yeah, it's just different conversation. It's more relationship based, and then eventually it's the relationship gets out of the way, and then it's 100% just financial economics based, which it has to be always to an extent, obviously, right? But yeah, it's definitely a different flavor of convo.
What are you guys working on?
Right now, we have another deal in Orlando that I'll let Travis. What's the latest? I guess we're having our partners review it at the moment.
Yeah, a little bit of the background. Like Dave mentioned that we were looking at a 280 unit deal. So that deal fell through. However, there was another deal right behind it, which is a 440. What's the unit size on that? 446. There's a 446 unit deal that we're working on, and we have it fully underwritten. We're like confident that we can make good money on it, but it's a big, heavy raise. It's a $138 million acquisition. So right now we are sharing this out to some of our New York City contacts, big New York City landlords who have the balance sheet would help us take this down. So where we're at in this business is we just want to align with like really big groups that have the big money, and just take down sizable deals. That's kind of where we're at in the phase of our business.
Right. Makes sense.
There's so many, I always say, there's a million ways for a million people to make $1 million. So it doesn't matter. There's so many different approaches. Like when you hear about like Dave and I talking about like $138 million raise, it's like, or not $138 million raise, $138 acquisition price. That could be like intimidating, but real estate is math, and there's nothing wrong with taking down like a 20 unit, 30 unit, 40 unit, 50 unit deal. It's just about what you want. So real estate is you're buying an income stream, you're buying future cash flows. And that's really what everybody's doing. You're buying future cash flows. How much money do you have to spend to how much money you're going to make in the future? So hopefully it's not like hopefully something that's not approachable to everybody. It's like we're all just trying to buy real estate here.
Yeah, it's like one of my, I love like the people have like a couple 100 million assets under management and they got like 1% of it or whatever. It's like the funniest thing. It's like realistically, we go big like this, we get a smaller piece, but it's the same work to do it than doing a small deal. So in our eyes, it makes the kind of fruit of our efforts a little bit better. Yeah, it's a funny game, I guess. There's like a billion ways to do it. We were in Orlando like 3 times in 6 or 7 weeks this last quarter, and that was fun. I think that as far as like going back to capital raising, Travis, was like probably one of the like more eventful and like higher levered tasks we did. So I guess outside of just deal sourcing in general, our goal this quarter is to kind of leverage that in-person networking now that like COVID's not away, but life is kind of moving on type of situations, slowly getting back to whatever normal is. To do that in New York a ton more, and do it in Orlando obviously a lot too. We just had our last meetup here in person was last week. Had a great time with that, and it's just been a lot of fun since the last I guess the last few months have been especially exciting. Just makes the game more fun when you can talk to people in real life, really too.
Yes.
Where you guys
Do you
looking?
guys have any conferences in the schedule?
We don't have anything new other than like our Mastermind Conference, which is in end of March, early April in Sarasota, but nothing that's like large conference. That'll be just like 50 to 100 people.
We host our own. I think Jerron, you asked where we are. We're based in New York City, so we host like a monthly in-person meetup, and we had one last month, and we're going to do another one on the 17th of February. So we're hoping to have a really good turnout for that. And that's kind of what we do as far as like sort of like internal small conferences in the city.
You said you guys were doing a mastermind or in Sarasota?
Yep.
Yeah, we're just in a networking group, and they're putting together just like a kind of members masterminds, little weekends, just drinks and food and kind of getting together and closing deals type of thing. So it should be a good time. Get out of this New York weather for a little bit too. Yeah. I don't know how much you guys have gotten into doing those types of things, but they're super exhausting, but also super rewarding. All these networking events where you have to talk to people that you've never met all day. It's a different muscle to flex for sure. Even like me and Travis, who I think I would say we're like pretty decent at just holding small talk conversations with random people for 5 minutes. It gets to be like by the end of the day, you're just like exhausted and ready for bed. It's like I'd rather like run a marathon some days. So yeah, it's funny. I think we have Jose is on too. I don't know if he's on the mic or not. Welcome.
Yeah, I'm here.
How's it going?
How you guys doing?
Oh, pretty
Not
good.
too bad.
Alright.
I'll move this a little bit like that. So
Nice. Is that the Purdue you're rocking
it
right
is
now?
Purdue.
Nice.
Yeah.
Yeah, I feel like I saw a Boilermaker flashed on the side there. So yeah.
Yeah. What? Yeah.
There you go. Yeah. Yeah.
Yeah. I have a handful of hats, so it's always hard to tell which one's which. Depending on
Nice.
what I'm wearing.
Yeah. Yeah. Thanks for joining us. Yeah, I guess I I don't know, not everybody knows everybody here, so if you want to give a little bit of your background or what you're focusing on.
Yeah, right on. Yeah, so my name is Jose. I'm originally from Northwest Indiana, went to Purdue. Obviously, I'm still an engineer, so that's my W-2. Regarding real estate, though, I bought a couple single families several years back, and then just started getting into multifamily. So I'm out in Phoenix, Arizona. I bought a 10 unit by myself, back in August. And so I self-manage all 12 of my units, and I'm focusing on the Arizona market. So basically Phoenix, Tucson, Casa Grande, Maricopa, all that jazz. Just because it's right in my backyard, it's easy to get to for me. I do a little bit about notes, interested peripherally and short term, but all my stuff is long term rentals. So yeah, but otherwise I'm just kind of getting up to speed, meeting people. So I'm actually it's on the topic of this, and it was about capital raising, and so that's a big interest for me because I'm out of cash. I hate to say it. So I can, I need to refinance. No, let's start over. I'm going to figure out how to most economically refinance the 10 unit commercial loan because it's been under a year. And even though I could pull out a bit of money, there's going to be, I got a 3% prepayment penalty, which I don't really want to incur. There's going to be other refinance fees. I don't want to have to do another appraisal. Commercial appraisals are expensive. So I'm looking at my options there. If anybody knows anything about, if anybody willing to float me a second on a commercial loan, I'm all ears.
I was gonna say
Otherwise,
supplemental looks like the move, but you got to find one. So yeah.
yeah. So that would be
What are you gonna do with
ideal.
the proceeds? What are you going to do with the proceeds?
Great question. So, I was chit-chatting with these people, and my initial goal was to sell. My thought was to sell and then kind of figure it out from there. But they're telling me I should keep my W-2, use my W-2 for my day-to-day living, and literally refinance, just incur as much debt as possible and start doing LPs. I've got a couple LPs already, but my goal is to I want to do a JV or some light syndication on something here in Phoenix. If I can get a 20 unit, but right now, a colleague is selling 24 units for, I think, 6 million. Right. So even at 6 million, I'm going to need to raise money. I don't have, 1.5 million sitting around. So use the money to get into a GP deal. So reinvest into a GP, and then also use it just to kind of fund, if I can find a JV, maybe an 8 unit or 10 unit that I can do a JV on with maybe 2 people to learn. So I like the self-management part of it. But I know that I can't scale myself with the W-2. I can't self-manage 50 units as a W-2.
I don't think you want to anyways.
No, I don't. Yeah, you're right.
Even
and
if
I
you were
don't want
full-time.
Yeah. So, but yeah, Travis, I know, to answer your question, once I get the funds, I know what I'll do. Start looking for more opportunities. I don't have a place for them today, which is why a sale is not really in my best interest, because I don't want to have to force myself into something to 1031 it. So yeah, supplemental loan, if that's what it's called, I guess, in the commercial realm. But yeah, that's kind of where I'm at. I think that's pretty much all of it in a nutshell.
Got it. So have you raised capital before, or everything you said has been self-funded?
Everything I've done has been self-funded. I actually didn't have a place for capital. I know a lot of people. I'm an aerospace engineer, so I know a lot of people in the industry. I've been out here for almost 17 years. So I know a lot of people that are looking for something to do with money. I've got some family members. I even got my brother to LP on 2 of the deals with me. So he's looking to invest and diversify. He thinks the stock market's overinflated. So I have the access, I think, to people to do a capital raise. I just need to learn more about it, because I don't want to blow my opportunity, because I'm not going to have a half a dozen opportunities, I don't think, to talk to the same person repeatedly. If I F it up enough, that they're basically going to be like, you don't know what you're talking about. And, you know, and I may have done that already, I think, with my father because of his wife. They sold to some property in California, and they're sitting on, I know, like over $500,000 in a savings account. And so I went to them a couple years ago, and before I understood the whole concept of capital raising, and her question was basically like, why do you need us? What's going, why do you, and she was just really kind of shutting me down in a lot of ways. And I don't want that to happen again on another opportunity if it happens. So that's why I'm trying to learn as much as I can. So, and then methods to reach out to people. So I'm putting together my email list. I'll try to do a monthly newsletter, so to speak. And then, just kind of get people warm to the ideas of what I'm doing, and then worry about capital raising later. So, sorry, I feel like I'm just kind of yammering on about this stuff. But,
Oh, not at all.
No, we're all taking turns, so no, that's good. I guess you mentioned like the fear of navigating the conversation or whatever.
right.
Is that more just like putting reps in on like seeing deals, so you have like the lingo down, or like what is that to you that would like be like the hurdle you got to get over?
Well, the hurdle is really more that I just don't want to blow an opportunity by turning somebody off. And I don't think it's the lingo that I'm really worried about, because I can speak intelligently about these things. It's really more of a understanding the approach. And I think I've learned a bit since then, which is just let people know what you're doing. Don't be worried about approaching them, just yet. So I've kind of figured that aspect out of it. Just let people know what you're doing. Talk to them about this, tell them what you're doing, and, let people kind of come to you. But eventually I'm going to have to do a capital raise, and I'm going to need to talk to some people and be more, I may have to, I'll have to actively ask as opposed to just letting people come to me, right? And say, hey, I'd like to invest. So that's the kind of, dialogue that I'm trying to learn a little bit about, because I don't want to blow, if I don't want to blow opportunities, I don't want to turn people off by not being prepared, if that makes sense.
No, it does. It's like the pull versus push campaign, really. It's like it should be. I always mess this up. I guess you kind of want to make it a push campaign, just let people know what you're up to forever. And then when you actually need the money, they already have it on the radar, and you just say, oh, here's that deal I was alluding to, essentially. Here's what I've been up to. Here's that actual opportunity. Which is funny because like the SEC guidelines, like they don't want you to do pull campaigns, but really it's not even that effective on a 506B deal to do that anyways. Like if someone doesn't know you, they're probably not even going to get into that deal like 9 times out of 10. So I always found that like kind of entertaining, because I just wonder how effective like advertising randomly for a deal that no one even knows, and they don't know you, about how effective you could be. I'm sure it works to some level on the right deal, but yeah, it's kind of funny.
I think for someone like me, I can't speak for anyone else. For someone like me, it wouldn't be very effective. But you heard that what was the whole Brandon Turner, raised like $27 million in 20 years.
Yeah, he's got a lot of brand equity. So
got a lot of exactly. So
Yeah.
in an instance such as that, there's clearly a pull. I mean, he could basically just blast out to people he's never even talked to ever, and in that instance, generated a lot of interest, I'm sure.
Yeah. So you mentioned newsletters. So what's the thought on that? We've done a lot of kind of ins and out on what we put in the newsletter and what's our kind of, I don't know, our voice on it. Because we got like different avenues. Like I run a podcast. We are kind of doing some different channels, but the newsletter to me was like always a little trickier to get it like the right mixture of like personal and like informational. So I didn't know if you like started it, or like what you're putting on it, or what you're looking at.
It's funny. So yeah, I haven't done it because I'm still building my curating my email list, because there's a bunch of people. It's surprising how many emails of people you have, and I'm not going to blast out to everybody what I'm doing. But the idea would be to do both, make it personal. So have something personal. This is what I've been doing. This is what maybe we'll say some market in Phoenix is doing in general. And then maybe something informative in general. Like that would be the thing. I'm going to hit those three things. One, something personal about what I'm doing. And one, something in general about, maybe the Phoenix. It doesn't have to necessarily be the Phoenix market, Arizona market, but it could be national. Something easily digestible by non-real estate investors. And then the third would be something informative. One example might be, a simple example, of course, is self-directed, 401ks, right? A lot of people don't know about it. Some people do, they never really think about it. But if I become, hey, this is something, I can kind of pique someone's interest. Backdoor Roths. I mean, it doesn't have to be overly complicated, right? But just a way for people that are interested in investing, of them to maximize, their potential, right? By minimizing taxes or getting into proper tax shelters and, things like that. So I was trying to hit those three things. That was my plan. I don't know what the response is going to be, or, what's going to happen. So I just need to get people to be interested in what I've got to say. Because some email newsletters I read that I get from other investors, I kind of glance at it, I was like, this doesn't interest me. Just gotta move on.
It's very tough. I'm with you. I try to be a student of the game, and when the ones I do open, I try to think about what about this made me open this and keep reading, other than just marking it as read. So I try to take that back to ours every month or whatever and figure out what it is. But we had, what was it? It was like a double read rate month over month this month on ours, and I think part of it was we tied in lessons learned, which was a little bit market specific, but also it was our experiences this last month, just what we learned, literally well, I forget even what we wrote in there, but just some personal experiences of just what we did over the month, which tied back to multifamily. People could essentially use these tips. So it was a good mixture of that first paragraph was personal because we experienced it, but also informational. It's oh, that's a good tip I never would have thought of, so it's interesting to toy with that and see the results month over month. I think if we change one thing over time, it's the Dyson method. James Dyson changed the vacuum one change at a time to see what happens
Right.
to the design. So go for that. Go for that approach.
Maybe that works. I don't know. There's gonna be it's gonna be a learning curve for me for sure.
Yeah, I think it is for everybody. No matter how big you get, it's all just kind of experimentation. So yeah.
Right.
Yeah. I know.
Maybe it's valuable for us to kind of talk about our newsletter a little bit, because I think that's a really important factor of ultimately raising capital.
Yeah. What did you have in mind?
No, I don't know if that would be valuable to everybody, because ultimately this group is capital raising, and we feel as if the best possible solution here, if you want to raise big dollars, it's volume. With everything else, the name of the game is volume. I don't know if that'd be valuable to everybody.
Do you want to show it, you mean?
What's that?
What did you want to do? Show it? Or just
no, just give an example of how we approach the newsletter, a little bit of the content, our thesis behind it, and ultimately what we're trying to achieve.
I've been working on my emails this week, so that would be wonderful.
Okay, so I think that's a little piece of value that hopefully everybody can appreciate. So we've kind of adopted it from other big syndicators. When they have a deal ready to tee up, they blast it out to their network, and they tend to be able to raise on their deals. So with that thesis, we want to make sure that, number one, we're sharing value before we ask for anybody's capital. So the whole idea is we put our regular newsletter every single month, no matter what. And this way people know who we are. They're familiar with us. If they see our email for a year, we're not this unknown entity that's trying to raise capital for them. Also to that too, and it's never us trying to raise capital. The whole idea is we're providing value. And if they can get value out of one of the deals that we're presenting, amazing. If they can't, somebody else can. So I think that's the whole mindset. You're never asking for money, you're providing value. So I think that's kind of one important mindset to have. And we're always tinkering with, number one, content, and then number two, time and day that you send the email. You don't want to send the email the same time everybody else does. So if you want to get people to read your email, you have to kind of think a little differently, and that's different for everybody else. I think ultimately, if you're going to raise a lot of capital, you have to have thousands of people in your newsletter so that they know what you're doing. And like Dave touched on, what we do is we write a little bit of anecdotal stuff about us, our approach in the market, what we're seeing, and then lessons that we learn each month. And that helps us to revisit the things that we've learned each month, and we could compound that every single month so that we keep on getting better. Does anybody else here run a regular email campaign?
I just started to create, like a drip campaign just this week though.
Good.
Did you send your first one out or no?
I have like the welcome one, but I would say my second one is really like the information, more like what you guys are talking about. And I have not sent that out yet. No. I figured I'd wait until I have like about 4 emails in the sequence before I start sending them out. And I'm building that, that email list as I'm going to.
Yeah, that's important. Kind of to touch on that, building the email list. I think the worst approach is like random getting emails and sending them to people who don't know that they're receiving it. The best way that we get emails to send emails out to is by hosting our meetups. So like every month we get a whole fresh new group of people who come to our in-person meetups in the city, and then conferences. We try to hit 4 conferences a year, and each one of those conferences we're getting 30 to 40 contacts. So it's all about meeting people and then getting permission to send them an email. Again, the name of the game is volume. So we're planning to roll out like a little bit of a YouTube series. So the whole idea is to funnel every channel into our email. So we want to hit every single meeting. We want to be hitting Instagram, Facebook, maybe even like TikTok in a little bit. That's like a really burgeoning platform. I know we're laughing now, but TikTok's obviously gigantic and only getting bigger. And we gotta get on it, or we're gonna get rolled over by it. And also like the in-person stuff is so important. It's all about just people knowing who you are. Like if you look at someone like a Grant Cardone, who I think as a syndicator, brilliant, amazing. I don't think I'd invest in his deals because I don't think they're juicy enough for me. But I think his approach is one that is just like kind of like the gold standard of being able to raise a ton of capital in a very short period of time. So like, what does he do? He's in your face all the time. He's got his Instagram. He's got everything. He's on YouTube. He does his 10X. He's got so many channels with which people can funnel into his system. That he does it right. The idea is, how can you get more people to know who you are? And then push the button and you're raising billions of dollars. It's that simple.
That's it. It's just 3 steps.
Yeah, right.
Really, I think the right approach is to think in at least 3-year chunks, because it's like so easy to think short term and then just like get defeated because it's not working this month or it's not working this week. Real estate you have to build deep roots to build a very tall tree, and trust is not won easily, and it's lost very, very easily. So you just got to be present for decades. People have to know who you are. You have to be already active on deals and volume. It all comes down to volume. And that's what me and Dave have been talking about. Time plus volume equals success. That's a very short and simple equation.
Yes.
Now, go ahead, Lacey.
Do you feel like someone like me just beginning, there's a point where you're spending too much time in the marketing side of things?
Probably not. Everybody should know what you're doing, or at least what you want to do. I'd probably post something on Facebook like once a week, something on Instagram, like a success story, keep up with your email, and just try to stay active, try to invest in deals, even as a limited partner, just so people know that you have your money working in the market that you're trying to share. There's no such thing as too much marketing, unless it's like really bad.
I hope not.
No, exactly. And I'm sure it's not. I mean, as long as it's like decent marketing, and you'll always improve. Better to put out something bad than nothing at all.
Right.
Done is better than perfect. Yeah.
Yeah. Fair.
Yeah.
So
Probably like.
just let everybody know what you're doing.
Yeah. Absolutely.
So I was thinking of, since I haven't done my first email newsletter, of sending out an email to all of my friends and family as myself and saying, hey, I just want to let you know I'm starting this newsletter. Do I have your permission to add, or just say, I can just say, because they're friends and family, hey, I'm going to add you to this newsletter, so you'll be getting an email from me. If you don't want it, just let me know, and I'll just pull you off the list. It's not a big deal. I feel like I could probably do that with my friends and family initially, just to kind of get, because I don't want to have to, if I just send them an email from my business, they're just going to be like, who is this guy? And then they're just going to delete it, right? Because they don't know. And so I was thinking of doing that as an initial first step. Again, just kind of an introduction and like, hey, by the way, I'm going to do this. Let me know what you think.
I think that's.
Or even say,
I was gonna say I have a template I could send to you, like an initial email, but I think something that might be best for you to do maybe simultaneously is maybe like take a couple pictures of like the 10 unit that you did and just like talk a little bit about that first. Like say like I know you're in a W-2, so it could be like a difficult balance. You don't necessarily want everybody who's associated with your W-2 to know you're doing something like this.
right.
But if you're going to make the jump or you're going to do more of this and raise capital, you're going to have to rip off the Band-Aid at some point,
Right.
I think. So I would talk about the success you've had. Like not a lot of people already have assets under management. So I would, have you posted anything about the units that you've taken down?
I think I try to post things to like Instagram, but I don't think about it. I even have reminders on my phone every day, post to Instagram, and I always forget to take pictures. And Instagram's all pictures. So I forget.
You could do like video and pictures on like Insta and Facebook on your property, talk a little bit about how you bought it, what you're looking to do in the future, like what's working really well. This way people are like, okay, I'm comfortable. Like Jose is already in the game. And sure, if he brings me something I can make whatever, 6-7% return on like a preferred return, and then also on the sale or refinance, I can make more money too. Like, why not? If I can put my money to work, heck yeah. If Jose's going to protect it, heck yeah, he's already in the game. I think that's the importance of sharing what you're already doing. So I would do a little bit of video, do a little bit of pictures to Instagram and Facebook, and then also do the email. For those of you who don't know, I've been in real estate already. I have a 10-unit deal, looking to scale up my business.
Right.
If you're interested at all hearing about what it's like to invest in the deal, it'd be great to catch up over a quick call. If not, I wish you all the best.
Right.
But I have a template. I can send it over. You want to drop your email in the chat. And if anybody else wants it, I can send you over a template on like an introduction to like friends and family.
We can send it to everybody, Travis. I think I get everybody's email.
Oh, perfect. Yeah, Dave, do that at the end.
Well, I'll make the to-do is that we do that.
We'll send that over to you guys. Also, one thing too, like don't get discouraged. This is it's at least a decades long game. At least a decades long game. Takes time, but never give up. If you never give up, you won't lose. That's the most important. Stay persistent.
It's a team sport, right?
It's a team
100%.
sport. And if you just stay persistent, the universe will give you what you want.
I love it.
If you give up, you won't win. So never give up. Any other questions anybody has about any more nuanced things or anything maybe even more simple, or no bad questions?
So I was just given the go to help finish up a raise. It's actually they've already closed on the deal. I'm just doing some gap funding for them and things like that. I have my email going, I have my social accounts going. I feel like I struggle with like getting on the phone with investors. Do you have any tips or tricks on that?
I'll kind of start out like, do you like the deal personally? Like, are you going to invest in it no matter what?
I do like the deal. Yeah.
So I'd say like step number one. I know you didn't really ask this question. Like step number one, if you wouldn't put your own money into it, it's going to be really hard to sell it. That's step number one. I would never, ever, ever raise for a deal if I wasn't willing to put my own capital into it like tomorrow. So that's like step number one. Step number two, and this kind of goes back to like already greasing the wheels. Like if you already have the email newsletter, I would write your regular newsletter and say, I have an excellent opportunity for a deal in this city. Here's what I love about the deal. If you'd love to find out some more information, feel free to set up a call with me so I can discuss what investment looks like. So that's kind of how I would do it. But if it's like cold to friends and family, if you're comfortable with them, you could just say, hey, I've got an awesome deal that I'm putting my own money into. I've been fortunate to be asked to bring along some other capital, so I'd love to see if this is something that meets your criteria. I think that's probably the right approach. I would always lead with, I'm putting my own capital into the deal. And I would put your own capital into the deal. If you're going to raise, I'd put your own money into the deal.
That makes sense.
So that's kind of how I would lead. That's a great deal. Putting my own money into it. I think it's a really, really good opportunity. If you're looking for a really good, safe return.
Right.
And right now is an awesome time because the market is in serious fluctuation. This is a great time to raise capital in real estate. Everybody's afraid. Nobody knows what's happening with the market. People are going to more so allocate capital to alternative investments that are going to give you a fixed return as opposed to the stock market. Who the heck knows right now?
Right.
Lacey, what about the phone is so different for you? Is that talking to people that you know already or new investors? What is the hesitation there, I guess?
I think it's new people. I think it's like that flow of that medium of, I want to make sure that this is right for them. And so making sure that I'm understanding their picture, and trying to, I get that it's that flow for me, if that makes any sense.
Lacey, how much capital do they want you to raise for this?
So they have 2 million, and I was very honest and transparent with him. This is my first time doing this. So we're just going off what I can. So the goal is 2 million.
For you to raise?
That is the backfill. So it was initially a $6 million raise.
Okay, so they have 2 million left.
Yeah.
And what do you like about the deal?
I like that there's a lot of value add opportunity. It was a classic mom and pop in the Midwest. Sweet little souls that, haven't done anything to the property in a long time. Way below market rent. I think that's my favorite part, is really the value add opportunities.
Okay, a lot of value add.
Yeah.
And then what's their hold period? What are investor returns going to be? What does it look like if I invest like 100,000 in the deal?
Right. Oh, you're putting me on the spot. I just got this
You
yesterday.
have to know that.
This is good practice.
It is good practice, so I appreciate it.
No, I'd say you have to know that on like the back of your hand.
Yes. So I've been researching, or I've been looking at it. And I don't know it like the back of my hand just yet.
Okay. Well, that's probably step one. You have to get so in tune with the deal that you have to know the nuance of it, especially if you're going to put your own money into it. Like number one, make sure that you're not going to lose money. And then this way, if you vetted that out, like you're at least okay with putting your own risk in there. This way, if you're sharing it with friends, family, or anybody else, that you could sell the deal. You have to be able to know exactly what the returns are, what the risks are too. I always love leading with the risks too. This way your investor knows like, hey, they're thinking about everything that can go wrong. And if we identify every pitfall, at least we know there's a chance we can avoid it because we've identified it. So always identify the pitfalls, the risks, obviously the upsides, and then just hard numbers. Like, how much money am I putting in? What's the preferred return going to be? How long are they going to hold? Are they going to plan to refinance? Every deal, it's all predicated upon, I'm putting money in, what money's coming out, and when is it coming out? People like to know that. So I get that really, really tight. Because if you're going to get somebody on the phone, like, if we just had that conversation, I couldn't invest in you. It's impossible.
No, exactly. Yeah.
So I'd really get that info tight. I'd study, you have the offering memorandum, I assume, right? Or at least
I do.
Yeah, I'd study that. Like, I'd read that over and over again, so you know exactly the opportunity. Yeah, that's probably the right starting place for that.
Actually, that's really interesting because it's funny because I know what I'm doing a little bit more than somebody that doesn't know anything. Even going to some of these, watching these webinars, and I'm just looking over the numbers and the returns and all the, their projections and all this stuff. It would be interesting to know if I, put in $100,000 as an example, because it's a nice easy number. Here are my expectations based on, my distributions and my return based on whatever. Nobody does that. At least I haven't seen it yet to where they would do that, because they usually say, well, the distributions aren't going to be much for the first year or maybe a year and a half, depending on the reno, depending on all that jazz. But they're like, well, but we expect this. And, 7% preferred return means nothing if your expected returns are 0, right? Because it doesn't really matter. And even though you might catch it up at the end, they kind of always hide that, not hide it, but it's not obvious to somebody that is looking at this information cold, right? And so that's an interesting, I think that would be very interesting for most people. They just wouldn't really know how much they're going to be getting, every quarter or every whatever.
Yeah, and I think a good rule of thumb, something to think about, is like, most investors look to double their money every 5 years in a real estate deal.
Mhm.
That's kind of the rule of thumb, and that's what I look for in a deal. You're really looking for that, as far as like an internal rate of return, you're looking for that 20% IRR over a 5-year period, which would effectively double your money, the 2x multiple.
Right.
So that's what people look for. But that doesn't always have to be the case. But you're right. Like, always, like, what we put in like our offering memorandum, or at least whatever we present to an investor about the opportunity, we'll typically put like a grid that says, for every $1 million invested, here's what it looks like year 1, year 2, year 3, year 4, year 5. You just have to know the business plan. So that, but you're right. If somebody doesn't present that info, I'd be skeptical personally. But most companies do, though. Most big syndication firms will give you a breakdown of what $1 million invested looks like. Most.
Yeah, I'll have to look. What's that?
No, I'm saying if they don't present that info, it's probably a red flag.
Right. Yeah, no. I'll have to look. Well, usually they just put the percentages and the number, and things like that. But it would be nice. And, you look at the average, and your IRR, like you said, at the end of 5 years, and this is our goal, our exit strategy, and everybody gets all excited. And you're like, yeah, that looks great. But that's all predicated based on certain expected distributions at year 2 or 3 or 4. And it would be nice to kind of have a table that basically says, this is what you've invested. These are our expectations. This helps you understand if we're on track, because I don't want to come out year 5 and be like, oh, it turned out my IRR was only 12% per year, and it's like, what the, I was kind of expecting certain things. Whereas, I don't know, it's just interesting. I know, obviously there are no guarantees, but.
Well, the 12 would be a bummer, but really at the end of the day, as long as you don't lose people money, let's say you do a deal, it's a 12 IRR, you sell the deal. It's really not the worst thing in the world, if I'm being frank. The worst thing in the world is collecting money and just blowing the business plan and like taking a big haircut on the deal. But I digress. But then to that point, 12 IRR is not great, but
No, sure. But you just don't want your investors to find out month 59. Oh, by the way, you are expecting, X, and you're going to get 0.6X. They're going to be like,
exactly.
Yeah, it just helps people know if you're on track for what your proposed returns were. I guess that's all. Yeah, interesting. But again, I'm new. Maybe this is all going to come out, and once I start getting financial statements for it. That was pretty much why I invested as an LP, is because I want to understand what it's like from this perspective.
100%.
what information do I will I see, and what information do I really want to see? What is actually useful for me? So, anyway.
So what do you get out of those monthly or quarterly letters about that investment that you like or don't like?
Just started. Literally, I haven't
it.
really gotten much of anything. Yeah, I'm literally new to multifamily. The 10 unit was a mistake. It was not a mistake, but it was just an opportunity that just kind of, I wasn't looking for 10, I was looking for 4 units. And it just turned out that the search I had went up to $2 million because I'm in Phoenix. And then all of a sudden this 10 unit came up that kind of came on my radar. And I was like, oh, well, let me look at it. So that's really how this started for me. And this was just, like I said, I closed in August. And so
it's a good mistake to have. 2.5x your goal, so that's good.
yeah.
Yeah.
Yeah, right.
Yeah.
Yeah, I mean, I'm not complaining, right? So but it has been eye-opening for me for sure.
Yeah, and I think
sorry, Dave. I was gonna say we've LP'd into 3 really big deals as well when we first started out, because like it's so important to see how like a really big time syndicator communicates with the investors, how the cash flows work, and we also raised capital for that deal too. So we know what it's like to get capital sent from their account to our account to client accounts. And we've even, I think it was like 7 weeks ago, we exited one of the first deals we did. So we've actually sent out a big chunk of change to all our investors. So it's really nice to kind of see the wheels turn in a full deal. We've gone full cycle, and you're right. I think it's smart starting out to LP in a deal.
Yeah,
I can't preach that enough. I think that's a great place to start.
yeah.
How big of a deal did you get into for an LP?
I think there's 2. One's like 28 units, and I think it's just here in Phoenix, and then one is like, I think it's closer to 65 units, in that 60-70 range. It's nothing in the 200s or anything like that, but they are the GPs are pretty. That I went in because I know the GPs, or at least I've met them through multiple avenues, and seem very savvy. A little bit, a little experience. So the trust factor was high. And I know this isn't their first rodeo, so I don't worry too much about that. I'm expecting a quality product in the updates and in the just in how it's run. So
how'd you meet this group?
I'm meeting the majority of people through Rod Khleif's program.
Okay. Are you in the program?
I
assume
am,
you
yeah.
are, right?
Yeah, I did. Yeah, I bought into the program because I bought the 10 unit, and I was like, okay, there's a lot more here than I realize. I want to accelerate, so kind of a little bit different than most people. Most people buy into a program and they get it their first deal. I got my first deal and decided I need help. I need accelerated learning, and I don't mind paying for education. So
That's
it's
great.
been
Smart.
yeah.
Are you going to the Sarasota
I am.
network? Nice.
Yeah.
We'll see you there.
Oh, awesome.
Yeah, I'm also in Rod Khleif's program, so I'll see you guys in Sarasota too.
Oh, sweet.
Nice.
Very
Awesome.
cool. It's on my to-do list to buy plane tickets and get my hotel. So I should do that today.
Man, hotels are rough to find right now. I think the block is booked up, and we got our flights, but yeah.
Oh, is it really?
I've tried a couple times, and the block seems booked, so I'll figure it out. But I don't know. Yeah.
I hope not.
Yeah.
That's not good because the hotel rooms are inexpensive.
We're in an Airbnb big house. You guys are in.
Oh, geez. If you guys got space, but yeah, I didn't know
No, we
that.
don't know what we're doing yet, but we'll keep you posted. Maybe that's something we'll think about, Dave.
Yeah, likewise. Please include me.
Oh,
Yeah,
100%.
I made a mistake in not booking the hotel, so that was.
No, we'll do some research in a little bit, and we'll see if we find something good. Because like we don't want to be in a situation where we're like we have to be in a hotel super far away.
Yeah, because I looked at the hotels nearby; they're in the several $100s a night.
Mm.
Some of the
Yeah, it's
hotel
around
rooms.
spring break time, so it's pretty dicey right now.
Oh, is that what happens?
Yeah, I think so.
Yeah, Dave, let's look into that. Maybe we'll find something good and we can get everybody involved here.
Oh, fuck, man. I'm gonna be pissed if I did that. Well, whatever. You know what? Lesson learned, right? I didn't pull the trigger when I should have, and I paid a price.
That's right. We didn't book yet either, so we're good. All right, we're getting to the top of the hour here. We had planned for this to go about an hour. I don't know if anybody else has any last questions. I'm going to make sure that we circulate that email script for an intro to friends and family for capital raising. Yeah, anybody have any other questions before we break for today?
No, nothing from me.
Appreciate everybody joining us.
Yeah, thanks, guys.
Thanks for having us.
I appreciate your time.
100%. Hopefully we see you guys. Dave, when are we putting together the next one? Are we doing this on a monthly cadence?
We're monthly right now. I'd like to get to 2 weeks eventually. So we'll have to figure out our schedules. But yeah, we'll definitely at least be the monthly cadence. So in the meantime, yeah, reach out if you want to get on a call, the sidebar or whatever too. We're around. So it's not tough to find us, I don't think, these days. Yep.
Thank you so much, you guys.
Of course. Have
Yeah.
a great
Thanks, everyone.
Have
Thanks,
a great
guys.
night, everybody.
Yeah.